Is the Bitcoin downtrend about to accelerate? As of today, Monday, July 6, 2026, a significant shift is occurring in the derivatives market. While many retail investors wait for a bottom, professional traders are moving in the opposite direction. Specifically, we are seeing a distinct spread in options trading that is actively betting on further weakness in Bitcoin. This isn't just speculative noise, it is a calculated move by institutional players using complex options strategies to profit from the continued market downturn. Instead of simply selling the asset, these traders are utilizing spreads to hedge against volatility or to capitalize on a downward trajectory, signaling that the sentiment remains heavily weighted towards the bears. To understand why these option spreads are so prevalent today, we have to look at the recent history of this crash. This isn't a sudden spike in fear, but rather a prolonged period of instability. Back in February 2026, we saw the market suffer significantly as forced deleveraging accelerated, causing massive liquidations across major exchanges. This pattern of forced selling has created a cascading effect. We saw Bitcoin struggle to maintain momentum, even after hitting highs, as the market reacted to risk aversion. Even as recently as late 2025, we saw the price face intense pressure, dropping from the $107,000 mark down towards the $86,000 level. This history of volatility makes the current bearish option spreads a logical response to a market that has proven it can drop rapidly under pressure. The weakness in Bitcoin isn't happening in a vacuum. It is being reinforced by a global tightening of consumer sentiment and economic uncertainty. For instance, looking at the broader retail landscape, we saw UK retail sales fall sharply in June 2026 due to weak consumer sentiment. When traditional consumer spending slows down, high-risk assets like Bitcoin often bear the brunt of the impact. As investors move away from risk, they seek safety, leading to the risk aversion we've observed in the crypto markets. This macro environment provides the perfect backdrop for the option spreads we are seeing today. When the real economy shows signs of cooling, the appetite for speculative crypto assets inevitably diminishes. So, where does this leave us for the coming weeks? The evidence suggests a cautious, if not bearish, near-term outlook. With Cardano, or ADA, having already faced significant declines, dropping to levels as low as 24 cents, the contagion effect across the altcoin market remains a concern. The current options activity suggests that the smart money is not expecting a V-shaped recovery anytime soon. Instead, they are positioning for continued sideways movement or further downward probes. Until we see a significant shift in these option spreads or a reversal in the deleveraging trend, the path of least resistance for Bitcoin appears to be lower, as traders continue to protect themselves against the downside. The key takeaway for today, July 6, 2026, is to watch the derivatives market, not just the spot price. The specific spreads being traded in the options market are a leading indicator of professional sentiment. While the price movements might seem erratic, the institutional positioning is telling a very clear story: the market is bracing for more weakness. Keep a close eye on deleveraging events and macroeconomic data, as these will continue to dictate the direction of Bitcoin in this volatile cycle.